Hey guys, I'm Kalilah Reynolds and it's time for Money Mondays JA, brought to you in partnership with Proven Wealth. Today I have a reading assignment for you. It's a classic, The Intelligent Investor, the definitive book on value investing by Benjamin Graham, first published over 70 years ago in 1949. It's become sort of a stock market Bible for many, including the legendary Warren Buffett, one of the world's wealthiest men. In fact, Graham was Buffett's mentor and professor. It's said that after reading the book at age 19, Buffett enrolled in Columbia Business School just to study under Graham, and the two became lifelong friends. In The Intelligent Investor, Graham preaches a strategy called value investing. This involves picking stocks that appear to be trading for less than their book value. So value investors actively look for stocks that they think the market is underestimating. Right now, value investors are having a field day in this bear market, as several stocks in strong companies are trading way below their actual value. Value investors believe the market overreacts to both good and bad news. So right now, there's a lot of bad news because of COVID-19. Yes, some people are selling their stocks because they need access to cash in these uncertain times. But there are also others who are selling because they think that these companies will be very hard hit by this crisis, resulting in profits plunging and the company's value declining dramatically. Value investors would believe many people are overreacting to this news. They'll assess a company and see an opportunity to buy a stock at a discount. Now, the key is that A word I just mentioned. I said they'll assess a company. As I've told you in previous episodes of Money Mondays JA, not just because you can get a stock for cheap means it's a good value. Sometimes it's just cheap because it's really not worth a lot. It's the difference between buying a luxury item on sale versus a cheaply made item that's just cheap. How many times have you bought something cheap that fell apart soon after you bought it? So the idea isn't to go for cheap, but for value. And to do that, you have to assess the company's fundamentals. How do they make money? Are they making money? What are their long-term plans? Who is leading this company? Luckily, much of this information is available in their annual and quarterly reports published on the Jamaica Stock Exchange's website. You can also follow the business news and shows like Taking Stock, of course, for updates. Also, check out one of my early Money Mondays JA videos, how to decide if you should invest in a company. Now, another key to this strategy is patience. Buffett has several quotes about patience. One of my favorites is, "The stock market is a device for transferring money from the impatient to the patient." Even in times of dramatic declines like we're experiencing now, if you're patient, if you're in it for the long term, eventually the market will rebound and you can make a profit. It doesn't mean you have to wait until you're old like Buffett before you get rich. Buffett is 89 years old, by the way, and he has an estimated net worth of $1 billion for each year he's been alive. So 89 billion US dollars, making him the fourth richest man alive as of December 2019, according to Forbes magazine. But he's also been rich for a very long time, well over half a century. Anyway, for more about these strategies, check out The Intelligent Investor by Benjamin Graham. I just saw it on Kindle for about $11, or you can do the Audible version. It's pricey, but you can actually get it for free with a 30-day free trial. If you've read this book before, let me know what you think in the comments. And if you're going to read it, come back when you're done and give me your review. Also watch Taking Stock this evening. We're discussing a very similar strategy called contrarian investing. That's it for this episode of Money Mondays JA, brought to you in partnership with Proven Wealth. I'm Kalilah Reynolds. Stay safe.